please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, oil marketing companies cracked in trade yesterday after reports emerged that the government had asked them to absorb nearly around 1 rupee per litre in terms of hike in petrol as well as diesel. We spoke to HPCL chairman, Mr. Surana. He said that they haven't received any sort of communication.
Don't have any such input. I've seen some media reports coming up, and there were a lot of people were asking. We don't have any input, at least to that extent. Second thing is the price not changing cannot be directly attributed to this. The pricing is a function of 15 days rolling price.
There are trends that in some of the days the prices haven't changed. So one of the OMCs just said that, sometimes OMCs absorb increase in prices for consumer relief. So could you explain what that is?
No, I think I have said earlier also that we have to balance three things rather. Okay, there is a budget of the company, there is a budget of the consumer, there is a budget of the government. So we try to ensure that the health of the company remains healthy. At the same time, the consumers are not put to absolute inconvenience. Now, there is an element of taxation which all of you are aware of it, which is not in our purview, that is the government purview. We had been proposing that the petroleum products should be brought under GST, which will rationalize the taxation. But subject to that, depending on the market prices, we adjust the prices. Sometime it happens daily, sometime there may be a gap also, I am not saying that. Second thing is, if there is not been change, it does not automatically mean that there was supposed to be a change also. So it is a combination of many factors which it may not be apparent to you people on day-to-day basis.
Well, the big headline from the resolution space, ArcelorMittal has taken the battle for SR Steel to social media. Hitting back at Sajjan Jindal's remarks on defaulting promoters, ArcelorMittal has called the Not for Aeon JSW Steel resolution plan for Monnet Ispat a mockery of the insolvency process. Ritu Singh joins us with all those details.
Well, the two key bidders for SR Steel are fighting it out in public. In fact, ArcelorMittal took to social media to say that Mr. Jindal was making a mockery of the insolvency law, specifically referring to Section 29A. I'll start by reading out the tweet that ArcelorMittal's India handle has tweeted out. It's tagged Sajjan Jindal and said, "Interesting what decision is being taken on Monnet today, given that it's clear that JSW runs afoul of Section 29A as they are related to the existing promoters of Monnet Ispat, who is making a mockery here." Questioning this, now this of course is coming in response to what Mr. Sajjan Jindal had said earlier at a press briefing where he said, if a defaulting promoter tries to cure himself of selling his shares, then that is a mockery of the law. Now clearly Mr. Jindal in that statement was referring to ArcelorMittal, who has sold its stake in defaulting company Uttam Galva Steels to be eligible to bid for SR Steel. Now to give you a context, under Section 29A, any promoter of a defaulting firm cannot bid for an asset under NCLT, and there, ArcelorMittal had sold its stake in Uttam Galva to be eligible to bid for SR, and here now ArcelorMittal is raising the question, and at JSW this time around, given that JSW in a consortium with Aeon has been selected as the winning bidder for Monnet Ispat, and Monnet Ispat's promoter Sandeep Jajodia is the brother-in-law of Mr. Sajjan Jindal by virtue of being married to Mr. Jindal's sister, Seema Jindal. So that is what the reference here really is, and where ArcelorMittal is saying that Mr. Jindal has been making a mockery of the insolvency law by being selected as the winner here and not being disqualified. Remember, the two are also slugging it out for SR Steel, where Mr. Jindal has now joined, or JSW Steel has now joined the New Metal Consortium to bid for SR Steel. New Metal also, by the way, was earlier disqualified for having Revant Roya in the consortium, who is related, who is the son of the SR Steel promoters, Mr. Ravi Roya. Thereby, they were disqualified in the first round. In the second round, the two of them, along with Vedanta, also fighting it out. So here they're making their public, their spat very much public in a tweet. Now, we have to wait and see if Mr. Sajjan Jindal will respond to this one.
Okay, all right, Ritu. Thanks very much for that. Well, JSW has responded to the tweet. JSW Steel has gone through the rigor of scrutiny after the thorough examination of facts. JSW Steel is declared as the qualified resolution applicant and goes on to say Section 29A of Insolvency and Bankruptcy Code 2016, not only in Monnet but in other stressed accounts, the intention of unfounded allegations may be to defame JSW Steel or probably using an insufficient or incorrect interpretation of information to mislead the general public.
Well, time for a short break then, but up next, we'll get an exclusive chat with Nokia's global CEO on the way forward. Stay with us. Well, all eyes will be on some macroeconomic data that we'll be getting post-market close today. Well, Ekta, we're tracking both these two data points today, the CPI as well as the IIP data.
Yes, absolutely. Well, for the CPI data, I'll start with that because that would be more critical than market moving. Or rather, you know, it is also backdated data because we're dealing with newer cues such as the inflation target by the RBI, which is revised lower, and not to mention that fresh cue such as Brent crude. But for CPI for the March month, we are expected to see CPI come in at around 4.2% versus 4.4%. The core CPI is expected to be quite steady at around 5.17%, and the range, like it flashed on your screen, could be anywhere between 3.9% to around 4.38%. So that would be important to monitor, but consensus is going with a month-on-month decline when it comes to CPI. Now, obviously, we are expected to see food inflation to continue to, stem lower, and vegetables are probably going to result in that little bit of continued softening bias that we're going to see. But again, like I mentioned, the core CPI is expected to be sticky at around 5.17%. So that would be the key thing to watch out for, along with the obviously the trajectory of how food inflation would go on. And again, like I mentioned, we're working with fresher cues because we have to monitor what's going to happen with the monsoon. We have to monitor what's going to happen with Brent crude prices to assess what the inflation trajectory would be going forward. So this data, according to most economists, while relevant, would be a little backdated at this point. For IIP, however, we are expecting it to still be steady. That is the consensus, expecting it to come in at 6.8% versus 7.5%. If you look at most of the high frequency indicators, they've been positive this time round. So for example, the auto sales, the manufacturing PMI, as well as the core sector. The core sector came off on a month-on-month basis, but it was still steady with the likes of cement, which was up 22% for the previous month. So overall, we expect the IIP to be steady, led by manufacturing.
Okay, all right, Ekta, thanks so much for that. Well, India's mega 4-day-long defense exposition, that's DefExpo, has begun in Chennai. For the first time, India is showcasing its defense export potential. Our Prime Minister Narendra Modi will be formally inaugurating the event later today. We spoke to some players in the defense space, like Bharat Forge, Ashok Leyland, as well as Mahindra & Mahindra Defense. Let's listen in to what their plans are.
We are concerned like everybody else. But I think I must also add here that the Honorable Defense Minister has taken many steps in the last 3 months to, let's say, get the policy, the DPP 2016, which was the main thrust of the new policy, to resonate with Make in India and Indian manufacturing.
If everything fructifies, we are talking of north of 50,000 crores worth of products that we are working on. From a company that used to only make, logistics vehicles for 400-500 crores. In the last 1 year, we have gone from about 400 crores to about 800 crores. I think we have won like 19 of 23 tenders that we competed in.
I'm very happy and proud to having finalized the partnership with Shinmeva, and this is an exclusive partnership. With mutual trust, we believe we can give an excellent ecosystem for military seaplanes to our Navy. Contours of the final partnership and the project, scope of the project, will depend upon what final decision is taken by the government.
Okay, well, moving on then, India per user per month will become one of the top 3 consumers of data around the world very soon. That's the word coming in from Nokia's global CEO Rajeev Suri in his first interview in India since taking over the reins of Nokia in 2014. Suri says Nokia hopes to capture this opportunity with the next big bet being 5G. He believes 5G will launch in India as early as 2020. Kritika Saxena caught up with him and began by asking him on the growth scene in India in recent times.
Yeah, in last year we were double-digit growing in revenue terms in India.
Can you give me an idea, 20-25% plus?
Not as much, think under 20, but under still 20. Above 10.
Above 10, okay. What are the growth drivers for you?
For us it was a lot of 4G, so 4G networks, I'd say mobile and 4G. But not just that, also enterprise, software, and we're end-to-end. So this is not just a mobile company like we used to be in 2014. So transport equipment, IP routing, and every adjacency that goes with it.
You've completely dismissed all the prediction that 2025 is when 5G is actually going to be embraced. You've said that by the end of this year to the beginning of next year, we're going to see the beginning of 5G play out, correct? By when will it come to India? Given the fact that, 3G, 4G came 5 years to almost 7 years late.
I'd say it starts with US this year.
Correct.
And I'm talking commercial rollout of real 5G, new radio technology. And then will be China, Japan, South Korea, Nordics. India will be, I'd say, 2020.
Keeping the bottlenecks in mind, and I'm talking about bandwidth, the bandwidth issue is real. We haven't been able to successfully, holistically integrate 4G with our day-to-day systems. How will we handle 5G in that case?
I think you're right, because India has one of the most loaded networks in the world.
Absolutely.
The underlying issue here is that we do need more spectrum, especially when we start thinking about 5G. We will need enough new spectrum in the right bands.
But would you realistically agree that India isn't yet prepared?
India isn't yet prepared?
Isn't yet prepared.
I think the drivers are there, but it's more prepared than you might think.
When you look at your expansion, where do you think we stand compared to the other emerging geographies? And I'm not counting China and Japan here.
It's the strongest. I would predict that India, per user, per month, will become one of the top 3 consumers of data in mobile around the world.
How much more can you scale up your R&D presence?
Well, first of all, we do all major things here. We do the cloud, so the core networks, the cloud. We do Internet of Things, 5G. We're doing R&D for 5G here.
From here. Okay.
From here. It's a microcosm of what we do globally. So great work. And so we'll continue to scale in terms of whatever the needs are. So we do manufacturing here in Chennai as well.
How much more can you scale that?
With the volume. Both R&D will scale with success, and so will manufacturing over time. In 2015, we hit the 2 million unit production mark.
Okay.
And in 2018, we doubled that to 4 million.
How much more can you scale that by 2020?
It depends on how much 5G takes. If 5G really takes off by 2020, then hopefully we'll continue that scaling.
All right, then, time to slip into a short break. When you come back, we'll tell you all the cues to watch for in the futures and options space. Stay with
Well, let's tell you how exactly the Asian markets are trending right now. Well, we've been pointing out that it's largely quite a sluggish session that you're seeing for the Asian markets, and that is obviously a spillover of what happened in the US. There are concerns in terms of the geopolitics that seem to be emerging because of Syria, as well as the equation between the US and Russia, not to mention that the trade war issues still lie unsettled. So that's what you can see on your screen. The SGX should come up for you as well. Let's see how that's doing. It's still holding with a gain of around 24 odd points. Let's see where we eventually start. Manglam joins in to tell us more about the cues from the F&O space this morning. Manglam, over to you.
Good morning, Ekta. So 2 things really stand out from the flows perspective. The first one, the FII is buying for the first time in cash markets in FY19. So yesterday, the purchase was close to around 362 crores by the foreign investors in the cash market. The domestic institutional investors to about 110 odd crores. The second thing that stood out was second day running, we saw purchase in index futures by the FIIs. Remember, at the start of the series, the FIIs were just about 18% long. Now that number has gone up to 25%. 620 crore worth purchase out there. The FIIs added close to around 6,800 longs and covered about 1,400 shorts. So yesterday we saw some long purchase. Day before yesterday we saw some longs being added, some shorts being covered. Yesterday that continued as well. So the FIIs are now long 1 contract and short 3 contracts. Still net short, that would provide some more up move towards short covering if we sustain the run. If you take a look at the key indices today, it's a Thursday, so we always watch out for the Nifty Bank weekly options out there. The Nifty Bank is close around that 25,100 mark. We're seeing some call writing at 25,200, 25,300, as well as 25,400 levels. But at the lower level, there is some support at the 24,800 mark. That put is fairly active. In terms of Nifty, the 10,400 put saw some writing yesterday. The bulls believe 10,300 is something that they can defend for sure. And the 10,600 call, that one saw some purchase, perhaps for a punt buying at 33 rupees a pop. In terms of stocks, JP Associates, that one enters the F&O ban in yesterday's session. Fresh longs seen on IRB and Nalco. Fresh longs also seen on some consumption names like United Spirits and Bata.
Okay, all right, Mangalam, thanks so much for that. But let's hop across to Manisha Gupta. She joins us to give us the news with regard to what's going on in the commodity space. Hi, Manisha. Good morning. Any good news today?
Well, I don't know if you're looking at bullish prices as good news, but crude oil prices can definitely be a dampener for the Indian markets as we see a 2014 highs come back for the prices there. We did see prices gain up by yet another couple of percentage points, and we have hit a high above $73 for Brent as well overnight. Of course, as of now, off those highs because you have seen the U.S. weekly inventories gain up, and the U.S. output has hit a record high once again. So that's putting a bit of a pressure on prices. But until the time you see the geopolitical concerns continue, and that really seems to be escalating right now, until then, I think there is more support coming in for the crude oil prices. Ditto for come in. The prices for gold have gained up by $85 in this year already. And much of those gains, of course, has come back into last couple of weeks itself. So heavy, strong, safe haven buying coming in here. And not just for gold, you have the silver prices gaining. The palladium prices have gained up by nearly 7% in this week itself. So everywhere that you look, whether it's crude, energy, precious metals, base metals, almost everything seems to be inching up, and not because of their individual fundamentals, but because of what's happening in the global markets in sense of concerns, tensions, and geopolitical problems, etc.
Okay, all right, Manisha, thanks very much for that. So that's what's happening in the commodity space. But on to our bullseye corner then. Our contestants Ruchit Jain, Vijay Chopra and Vishal Malkan are battling it out this week for the strongest portfolio. Let's listen in to their picks for today.
The first pick today is a buy call in Tata Elxsi. It's stop loss below 1025 for target around 1095. My second pick is a buy call in the Redigo Khaitan. With stop loss below 361 for target around 395. My third pick is a buy call in Ashoka Buildcon. With stop loss below 260 for target around 295. And my last pick is a sell call in Kenfin Home with stop loss above 458 for target around 422.
A buy call on DLF. The stock closed at 213 yesterday. It could be bought for a target of 220. And a stop loss of 206 should be strictly kept on the stock. Buy call on Hindustan Copper. The closing price of the stock was 74. It could be bought for a target of 78 and the stop loss of 70 should be kept on the stock. Buy call on Nalco. The stock closed at 76 rupees yesterday. It could be bought for a target of 79 and the stop loss of 73 should be kept on the stock.
Allahabad Bank, buy with a stop of 51.5 for targets of 58. HDIL, buy with a stop of 40 for targets of 48. SAIL, buy with a stop of 75 for targets of 82. And Jindal Steel, buy with a stop of 244 for targets of 260.
Well, on that note, we'll wrap up on Power Breakfast. You stay with us. Bazaar Morning Call comes up next.